What if I told you that the financial markets are hiding dark secrets that could change everything you thought you knew about investing? October 1st, 2024 marks a pivotal moment in the financial world. As we dive into the latest market news, we uncover unsettling trends and shocking statistics that could impact your investments. Are you prepared for what's lurking in the shadows of the stock market? In this video, we'll explore the most critical updates, dissect emerging threats, and reveal strategies to navigate these turbulent waters. In recent weeks, investors have faced unprecedented volatility. With inflation rates soaring and economic indicators flashing warning signs, many are left wondering, is this the beginning of a financial nightmare? The once reliable stock market has become a maze of uncertainty. As interest rates rise and global tensions escalate, how can you protect your hard-earned money from potential disaster? 1. Inflation woes. Inflation has been a hot topic for months now, but what does it really mean for your investments? In September 2024, inflation rates reached a staggering 6.5%, leaving consumers feeling the pinch at the grocery store and gas pump. This surge in prices isn't just a passing phase, it's a sign of deeper issues within the economy. But why should you care? Higher inflation means that your dollar doesn't stretch as far as it used to. If you're holding on to cash or low-yield investments, you're losing value every day. Experts warn that if inflation continues to rise unchecked, we could see a significant downturn in consumer spending, which could send shockwaves through the stock market. Number 2. Interest rates on the rise. In response to inflation, central banks around the world are raising interest rates. The Federal Reserve has already hinted at multiple rate hikes in the coming months. This is where things get spooky for investors. Higher interest rates can lead to increased borrowing costs for businesses and consumers alike. Imagine taking out a loan for your dream home or starting a new business venture, only to find out that your interest payments have skyrocketed. This could lead to decreased consumer confidence and spending, which would ultimately hurt corporate profits and stock prices. Number 3. Global tensions. As if inflation and interest rates weren't enough to worry about, global tensions are also on the rise. From trade wars to geopolitical conflicts, these issues can create instability in the markets. For instance, ongoing tensions between major economies like the US and China have led to uncertainty in supply chains and trade agreements. Investors are left wondering how these global dynamics will affect their portfolios. Will companies be able to maintain their profit margins, or will they be forced to pass on increased costs to consumers? The answers are unclear, but one thing is certain: uncertainty breeds fear. 4. Tech sector turmoil. The tech sector has been a beacon of hope for many investors over the past decade, but recent developments have cast a shadow over its future. Major tech companies have reported disappointing earnings, leading to massive sell-offs in their stocks. Why does this matter? The tech sector has been one of the driving forces behind market growth. If tech stocks continue to falter, it could drag down entire indices like the S&P 500 and NASDAQ. Investors who have heavily invested in tech may find themselves facing significant losses. Now let's talk about what you can do with this information. As an investor navigating these turbulent times, your strategy is crucial. One of the best ways to protect yourself against market volatility is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, such as stocks, bonds, real estate, and even alternative investments like cryptocurrencies or precious metals. Knowledge is power in uncertain times. Keep an eye on economic indicators such as unemployment rates, consumer confidence indexes, and inflation reports. Understanding these trends will help you make informed decisions about when to buy or sell. In times of uncertainty, defensive stocks can provide stability for your portfolio. These are shares of companies that tend to perform well regardless of economic conditions. Think utilities or consumer staples like food and household products. Finally, always have an exit strategy in place. Know when it's time to cut your losses or take profits from winning investments. This can help you avoid emotional decision-making during market downturns. As we wrap up our analysis of October 1st's market news, remember that while challenges abound, rising inflation, increasing interest rates, global tensions, the key lies in how you respond to these challenges. By staying informed and adapting your investment strategy accordingly, you can navigate this spooky financial landscape with confidence. If you found this information helpful, make sure to subscribe for more insights into navigating today's financial world.